Good evening, everybody. Welcome to the session. So, here we are. I am Ramesh Singh joining you from Delhi. I hope you are fine. In Delhi, we are having kind of shivering cold. Okay, so that's how you see I am in high neck. Okay, so this is the situation right now in Delhi. Very good evening, Sriti. Welcome to the session. Uh, I request you all to, and good evening, Sonam also. I request you all to keep asking your doubts. Okay, and wherever you face any problem, you are free to share your doubts and views also. Okay, now say, uh, I have basically, yes, Shruti, basically in Bihar also it is cold, and almost whole of northwest India and North India is facing cold wave, and Delhi will face it more 1st January onwards. Anyway, so that is the condition of weather. In the meanwhile, I welcome you all to current economy class 2. This class on current economy is a bit different from the previous one, that is class 1. In which sense it is different? Difference is this. Actually, what happens? Ki discussions on current economy are easier to understand for those only who have got fundamental idea of economics. Okay, I hope you are getting my point. Those who lack fundamental knowledge of economics, they are unable to understand the discussion. So what I have done from this session onwards, this session can be rightly called as, you can call it, you can rename current plus conceptual economy. What I mean to say, कि whatever current events occurred in area of Indian economy, it will cover. But together with that, what we will try to cover, I mean, what I would like to cover, those concepts, terms, and ideas which are there embedded in the current event. I will be discussing them also now onwards. And today is the beginning. Okay? You will find the topic which I have picked for today, and today I will be organizing only 30-minute session in place of 1 hour. Okay? So in this 30-minute session, we will cover one topic. Welcome, Arun. So in this 30 minutes discussion, I will cover the latest financial stability report of RBI, which was released just yesterday on 29th of December. Okay. And other than focusing on important areas from where questions might be asked in upcoming prelim exam or main exam, or for that matter in interview also, I will be outlining them. Together with that, the concepts and the terms which come across the discussion and in the report, I would like to clear them also so that those one of you, those ones of you who lack fundamental understanding of economics, they are also able to understand today's session and today's discussion. Okay, so this is a little bit change which I have affected today, and it will continue in my upcoming sessions. Okay, and every week I would like to join you with one session of half an hour, 1 hour, 45 minutes. That depends on basically news which appeared in last 1 week or previous week. Okay, and as I told you in my previous session, this session is not being organized to basically discuss anything and everything in the name of current and conceptual economy. This session is aimed at helping you know which kind of current economic events are important for exam, what concepts might be asked in the exam. This is what I actually am trying to do in this session. Okay. So any doubt, any suggestion from any one of you? If you have, you can freely give me, or I move on to the session. Okay, today's session is basically on the latest financial stability report of the RBI released on December 29, 2022. Okay, so highly current. This report has been released by RBI just yesterday. Okay, and naturally, whenever RBI releases a report that covers whole domain of Indian economy, but financial stability report is a kind of report which basically talks about global economic scenario also. Did you understand? It means कि FSR is the only report published by RBI which discusses about Indian economy, future prospects of Indian economy in light of global scenario. Clear? Because this report has a kind of genesis in this. Okay? So whatever RBI has said in this financial stability report of 2022. Okay? Before going to that, I would like to give you some fundamental knowledge about financial stability report. Okay, just know this what exactly it is and when it was launched for the first time, what are its aims and objectives. Okay, just know the backdrop. Okay, historical background. Okay, historical background a little bit. Actually, the first thing you should know, he in wake of the 2007-2008 financial crisis, financial crisis, which hit almost every economic system of the world, group of 20 nations, G20 took an and initiative, and the initiative was aimed at in future whenever such financial crisis hit global economy, our financial system should be resilient enough to survive such crisis. This was the aim. Did you understand? So actually, on the initiative of G20 in 2010 December, India did set up a council that is known as Financial Stability Development Council, FSDC. Already few years back, in prelim, a question was asked on FSDC. FSDC is actually a council which got its genesis in G20 initiative. In 2010, it was set up, and its aim was, or better say, its aim is to actually prepare the group of G20 nations to prepare their financial system to ward off any financial crisis which global economy might pose in future. Okay, and fortunately since 2010 no such global financial crisis has hit global economy. Okay, but even if it hits, FSDC of India takes care in advance, much in advance, to take care of financial scenario so that our economy is able to survive such kind of possible global financial crisis. Clear? This FSDC is basically chaired by Finance Minister of India plus all financial regulators including RBI, Pension Fund, Insurance Authority of India, it all financial regulators are members, plus Finance Secretary, plus Chief Economic Advisor to Ministry of Finance, etc. They are the members. I have discussed about FSDC in my book clearly. Who are its members, what are its objectives, what are its jobs. Okay, but in one line, we can simply conclude that the main job of FSDC is advising government of India to take care of possible financial crises which our economy might face in wake of any possible global financial crisis in future. Okay, it means कि FSDC revolve around health of India's financial sector and financial market. Clear? Second information, this report is published twice every year. This report is published twice every year. Okay, and right since 2010, regularly two reports come every year from RBI. Okay, and months might vary. Normally, the second report for a particular year have been released by RBI in last week of December. But first report might be released in between March to December. For example, in 2010, first report was published in March. And in 2022, first report was published in July and second is published in December. It means that this is an affair. This is a report which is published by RBI twice a year. We are here concerned with the second and the last financial stability report published by the RBI. Is it clear to you? This much information is enough to take care of any statement-based question in prelim exam. Because in name of preparing current economy, I know very well, aspirants prepare great many useless things. And those who join some kind of current affair course, they face even more difficulty because they are bombarded with enough information, enough literature, and they find themselves completely lost to what is important for their exam, what is not important for the exam. It means that they are flooded with information, okay, and important things are lost. So as I told you in my previous session itself, this current economy and conceptual economy session is not aimed at flooding you with information. Just selective area, selective current knowledge, selective current economic events we will be discussing in the class. Clear? This is to the extent historical background is concerned. Rest you can take care from any book. You can refer my book also. Okay? Welcome Visist Purva. Welcome to the session. Now, coming to our concise idea about this report. Okay? See, what does this report say about? The first thing, the report says that actually global economy is facing formidable headwinds. I hope you have got idea about headwinds. Headwinds are basically those situations which negatively impact economic system. Okay? It means ki formidable headwinds. It means ki these headwinds are not casual and small. They are threatening the economic system of whole world, and it is creating recessionary situation. It means ki the kind of headwinds, the kind of negative, the kind of negative impact global economy is facing, they are posing risk of recession. And already you might have read in media, Europe is already inside recession. America is in recession. Okay, so recessionary risks are there. Anytime many other economies might start facing recession risk. Then it says interplay of shocks, financial shocks, resulted in tightened financial conditions and heightened volatility. Here, volatility relates to basically forex market. Okay, when you say tightened financial conditions, it means ki inflows, inflows of foreign investment, both direct as well as indirect. Clear? So I am clarifying the things which have been reported by RBI in latest financial stability report. Clear? So great many shocks. What are the shocks? One shock you can call that is supply chain shock. That is COVID-19 pandemic related shocks. Okay? Inflation shocks in America and Europe, etc. The interplay of economic shocks has resulted in tightened financial conditions and heightened volatility in financial markets. Okay, so in forex market, what you see, particularly against US dollar, our currency rupee has been depreciating like anything. So depreciation is indicated by RBI, hinting with volatility in financial market. Okay, because when financial markets become volatile, the value of dollar in any economy doesn't remain certain. So foreign investors coming from US or any other country, they are unable to decide ki whether it is the right time to invest or not. Clear? And then moving ahead, yet, just come here, yet sound macroeconomic fundamentals providing strength and resilience to whom? To Indian economy. It means कि global economic and financial conditions are quite adverse. It means कि global financial situation is quite adverse to India. But India still looks a bright spot and it is having a strength and it is showing symptoms of resilience. Resilience means कि resilience is a quality कि an economy can survive hardships and come out clean. This is what here resilience word stands for. Clear? So RBI says it means ultimately कि Indian economy is today faced with multiple kind of headwinds coming from global economy, which is threatening economies to face recession. Why it is happening? It is happening due to interplay of great many shocks, which has increased volatility in financial market and tightened financial conditions. It means कि the inflows of foreign investments in India has been going down and down for the past several months. Clear? So I hope this point is clear to all of you. Is it clear to all of you? I hope so. Coming to, even if you have got doubt, you can ask me, I will discuss all over again. No, basically, I am not giving viewpoint. Shruti, how can we save it? Your viewpoint or suggestion? Actually, the problem is that ki you need to develop basic understanding of syllabus and basic understanding of economics. Then you will be yourself able to understand which economic news is important, more important, less important, least important, and totally unimportant. This is what I mean, Shruti. Okay? And here, whatever I discuss, I don't give my suggestions. I try to make you clearly understand government's viewpoint and government stand because I am not here to do critical analysis. Okay? Because this examination doesn't expect from you to criticize government of India and government policies. Rather, you are supposed to analyze it, explain it. Clear? If you are being asked some suggestion from your side, you can give that. India is a bright spot. In our last session, I discussed. Look why it is bright spot. Here, one term has been written, Sonam, macroeconomic fundamentals. It means your current account deficit is manageable, your forex reserve is healthy. Clear? Did you understand? Your stock market is performing well. Private companies are not running in losses. Fiscal deficit of government of India is under much control. Tax collections are vibrant. These are basically macroeconomic fundamentals of an economy. Our inflation rate is still not out of control. It is on higher side, but still it is not alarmingly high as we have seen in case of either UK or USA. Did you understand, Sonam? Am I clear to you? So now from here, let us move on to the next important point which RBI has highlighted in the latest financial stability report. Coming to the next one, RBI says, RBI has said in its report that buoyant demand for bank credit. It means कि demand of loans from bank is quite vibrant. It means कि from all possible quarters, banks are getting demand of loans. An early signs of a revival in investment cycle, as there are cycles of business. Similarly, there are cycles of investment also. Clear? A investment by private sector, it goes up at times and it comes down at times. Clear? According to RBI, present time we see revival in investment cycle. It means key investors are eager to put money in economy and are benefiting from improved asset quality. Asset quality, it means banks. The loans banks have given, banks are earning profit over them. Return to profitability and strong capital and liquidity buffers of scheduled commercial bank. It means कि this point is all about our banks, in which condition our banks are. Our banks are getting good good demand of loans. Our banks are having basically good quality, good quality of assets. Here assets means basically the loans which banks have forwarded. Normally what happens with the aspirants, they are not able to understand what exactly assets of banks are. The bank's main assets are the loans which they have offered. They are presently getting profits on their loans. Okay. Third important thing it is saying, banks have basically buffer of capital, buffer of capital at healthy level, healthy level. What happens actually? Suppose कि today banks loans are paying profit, but tomorrow some of the loans stop getting serviced. So they will convert into non-performing assets. So for that period of time, banks need basically buffer capital. That is unused capital. Unused capital. Okay? Just see how I am connecting things. Yes. Yes, Abhinav, you got it right. Okay? Don't think of failure presently. Okay? Because our banks are not in position, any position to fail. What we are talking at present, good demand is being seen by banks for loans. Whatever assets banks are holding with themselves, they are having good quality. It means they are earning profit over them. And third is that if banks are having enough unused capital, which they can apply, which they can mobilize, which they can channelize to face any possible hardships in future. Did you understand? And be very clear. This report is valid for next 6 months because by June and July, first financial stability report for 2023 will be released by RBI. Clear? It means कि this financial stability report projects for whole 1 year up to September 2023, precisely speaking. But it takes in preview next half year only. It means कि as per the financial stability report, yes, yes, Shruti, you got it right. I will come to that point. Non-performing asset is the next point of RBI report. Don't worry. First, tell me whether the point which is written in point number 2, it is clear to you or not. Okay? It simply says कि good demand for bank loans are there. Investment is reviving in economy. Okay? And banks are in a strong condition because their asset quality is good. They are earning profit on their invested asset and they have enough liquidity buffer. It means short term plus long term. Both of the capitals are healthy levels with the bank. Okay, this is second point. Coming to third point. Third point is even more interesting. This point says actually scheduled commercial banks gross non-performing asset has fallen down to 7-year low, that is 5% presently, and their net non-performing assets, gross non-performing assets and net non-performing assets, it is at a 10-year low by September 2022. Okay, I hope you are clear about the difference between gross and net NPA. Are you clear about these two concepts? Actually, gross NPAs and net NPAs. Net NPAs. These are two ways to measure non-performing assets of bank. Non-performing assets are known by other term, that is bad debt or bad loan. Okay, it is plural. So GNPA is basically the ratio of NPA to total loans, and NNPA is basically the ratio of NNPA to total capital. Okay, let me give you example. Suppose कि NPA of a bank is 100 rupees. Bank's total capital is suppose 1000. Loans forwarded by banks is of suppose 500, and NPAs are total capital of bank is 1000. Total loans offered by banks are at 500, and NPA of bank is suppose 100, which I have written here. So this 100 is what percent of 500? It is 20%. And this 100 is what percent of 1000? Just 10%. One is GNPA and another is NNPA. Okay, this is NNPA and this is GNPA. Did you get this point? I hope so. See, NPA is same, 100 bucks. NPA is same, 100 rupees. But same money looks bigger in GNPA and looks smaller in NNPA. Now come back. So scheduled commercial banks NNPA is presently just 1.3%, but their GNPA is at 5%. This shows you that a big part of bank capital is still not used. This is buffer. Okay, it means that the gap the gap the gap gives you idea about buffer capital of banks, that is scheduled commercial banks. I hope you know what are scheduled commercial bank. Is it clear to you? No, Abhinav, actually, sir, with the extra capital, the banks invest in companies Banks can't invest in companies. Banks are there to offer loans. They can't invest. Banks can buy share of a company, but very limited amount of money they can spend on purchasing of shares. Banks are supposed to mobilize deposit from us and offer that money as loans to diversity of customers. And one big customer is private companies. Did you understand? Abhinav, I hope I am clear to you. Abhinav, so banks don't invest. I am talking. He, since there is a big gap between GNPA and NNPA, it means कि extra capital with bank is higher. This is giving resilience to bank. If bank can face, our banks can face economic hardships in coming time. This makes Indian financial system strong enough to ward off any possible global financial crisis and hardship. Okay, coming to the fourth point. Fourth point is related to capital adequacy ratio of scheduled commercial banks. Just see how it is written in technical language. It is saying a macro stress test for credit risk reveal that scheduled commercial banks would be able to comply with the minimum capital requirements even under severe stress scenario. The system level base level capital to risk weighted asset ratio is projected to be 14.9%, by which time a stress test for mutual funds and solvency ratio of life insurance companies, not life insurance, life and general insurance. General insurance companies remain above prescribed levels. It means कि capital adequacy ratio of banks by September 2023 is supposed to be 14.9%. Do you know how much it was? By March 2022, it was at 16.9%. It means कि banks capital adequacy ratio will fall down by around 2%. But even then, it will be healthy because prescribed level is just 12% for Indian scheduled commercial banks. Is it clear? Okay. Did you understand all this? And solvency margin. Solvency margin is a term which is used for insurance companies. Insurance companies. Solvency margin is the kind of insurance risk the kind of insurance risk our insurance companies are facing. Are they having enough capital with them? Enough capital with them. Suppose insurance policy holders come with claims on their insurance policy in kind of an event. So will our insurance companies be able to pay the insurance claims and settle the claims? Yes, they will be able to settle the claims, be it health insurance, car insurance, life insurance. It means कि not only our bank's capital adequacy ratio is strong enough till September 2023, but mutual funds are available with enough liquid capital and solvency margins of insurance companies in India are good enough. This is what it means. Okay. Rajwan, you are asking discuss GNPA and NNPA again. So you listen this class and watch this video again. Everything will be clear to you because I have given clear examples. See, Just listen me again because everything is being recorded. Don't worry for that. If you face difficulty even after rewatching and re-listening me, I am there to help you out because you have got my contact number also. I also have got your contact number. Okay? So don't worry for that. Clear? Let me move on to next point. Next point is basically merge over here, all and all. This is all about that. I hope you know what is CARA. CRAR. It's real. This is real term and this is a short term. Okay. This is basically capital to risk weighted assets ratio. Okay. Capital to risk weighted assets ratio. Let me give you some idea about CRAR. Capital to risk weighted capital to risk assets assets ratio. This is the real term, but it is popular as CAR, which is known as capital adequacy ratio. Okay, this is what we call it, capital adequacy ratio. What exactly this is? Actually, suppose कि CAR prescribed by RBI is 12%. Okay, suppose it is 12%. The prescribed level of CAR for banks operating in India by RBI. What does it mean? It means basically on every every risky asset of RS 100, banks should have RS 12 with them readily available. Okay, it means कि if a bank has risky assets of 100 rupees, so it must have 12 rupees in hand readily available. It means unused. Did you understand? This is what it means. Okay, so this is the prescribed limit presently. Our banks are already having 14, going to have 14.9% by September 2023. This is basically projection. This is projection of RBI, which might go wrong. But normally, such projections don't go wrong because they are based on hard-boiled data from India's banking industry. Clear? So, our banks are healthy enough. Undoubtedly, if you take data of March 2022, the CAR of Indian banks was at 16.9%. It means कि given the financial headwinds coming out of global economy, our banks have faced challenges. That is why that capital adequacy ratio will drop down from 6.9% of March 2022 to 14.9% by September 2023. Is it clear to you? This is all about today's topic. I hope you enjoyed this session better than our previous session because I tried to elaborate and analyze the concepts involved in this current economy discussion also. From next time, I will change title of the class. It won't be current economy class 3. It will be current plus conceptual economy class 3 from next time. Okay. Now some information about my courses coming up soon. Okay. Just inform your friends that by January 2, my offline and online courses in GS economy are commencing with a workshop in Delhi, Old Rajendra Nagar. Those of your friends who wish to join the course in offline mode or offline mode, they are welcome and join the course. Okay? And the workshop which I am offering on January 2nd, that is free and great many seats are not there. My class strength is going to be of just 40 maximum. Okay? And very few seats are vacant. So soon it will be houseful. Clear? So online and offline both are commencing on January 2nd. Okay? Anybody having any more query, you are welcome with your doubts. Here I am sharing with you my official Telegram channel, its link, as well as my Telegram group official link, which you can use to connect with me, get the link of my upcoming YouTube sessions, as well as you will be able to ask your doubts also live to me. And I am very quick to reply doubts of my students and visitors. Okay. Thank you for being with me. See you next day in the next session. In the meanwhile, if you have got some suggestions, some advices, you are free to share them using my Telegram group. That is one